welcome to the Deep Dive.
Great to be here.
So today we're diving into something pretty alarming, actually. The sudden collapse of a crypto project called Mantra.
Yeah, it's quite the case study.
You've got a report detailing how it just vanished almost overnight. And this was just days after they announced a pretty big funding initiative.
Right, $108 million. It sounds impressive on the surface.
Exactly. So the big question we're wrestling with is, how does that happen? A project announces huge funding and then poof, it's gone. And what does this whole, frankly, weird situation tell us?
It's a stark reminder, isn't it, about the volatility still out there. Even when things look positive, this source really paints a picture of a lightning-fast collapse.
Okay, let's get into that timeline because it's wild. The report says just 6 days. 6 days between announcing that $108 million fund.
Which was aimed at DeFi and also these real-world asset projects, RWAs.
Right, like tokenizing real estate or, physical assets.
Exactly, bringing tangible stuff onto the blockchain.
So 6 days between that announcement and what's being called a rug pull, that's barely time to even digest the first piece of news.
It's incredibly fast, and what's really striking are the actions they took. I mean, the decisiveness.
Yeah, the report mentions the Mantra team basically hitting the emergency brake hard.
Yeah, very hard.
And the specifics are pretty dramatic. It says they dumped 90% of circulating All-Nullers. That's their token, right?
All-Nuller, their native token.
Dumping 90%. I mean, that would just destroy the value almost instantly, wouldn't it?
Absolutely. It floods the market, craters the price. Standard procedure for this kind of exit, unfortunately.
And they also just deleted their Telegram channel.
Yeah, just gone.
Wow. That's often the main line of communication, isn't it? Between the team and, the community, the investors.
Precisely. It's a vital hub. And deleting it is like slamming the door shut and locking it. It sends a very, very clear signal. Not a gradual thing at all.
No, it sounds abrupt. Final.
An irreversible exit, it seems.
And the financial impact, the report puts it bluntly, the complete erasure of a $3.5 billion market capitalization.
Let that sink in. Billion. With a B.
$3.5 billion. So that's the total value of all their tokens, just evaporated.
Pretty much. Wiped out. And it's crucial to remember that $3.5 billion wasn't just, numbers flashing on a screen.
Right. That's real people's money. Investments. Hopes, maybe.
Exactly. Represents real capital, real potential loss for countless individuals. Its sudden disappearance just highlights the massive financial risk here.
The report sums it up with this phrase: classic crypto exit fast, silent, brutal. Why do you think that description fits so well sometimes in crypto? What makes these events feel, well, almost predictable in some corners of the space?
Well, that phrase, sadly, points to a risk that's kind of inherent in how decentralized, and let's face it, often less regulated some of these ventures can be. The barrier to entry for launching a project can be low. Sometimes the teams are pseudonymous,
Right. Not always clear who's behind it.
Exactly. And that combination can create an environment where these quick, devastating exits happen. And investors, they often have very little recourse. It's the fast, silent, brutal part.
So thinking about our listeners trying to navigate this space, what are the key takeaways here? What does this Mantra meltdown really teach us?
Okay, first I'd say it's a huge warning sign about volatility. Even with big, positive-sounding news like a $100 million fund.
Yeah, the hype doesn't equal safety.
Not at all. It shows that both DeFi and these RWA projects, despite the buzz, carry significant risks. The announcement didn't guarantee anything about stability or, legitimacy.
Okay, so look past the headlines. What else?
Second, it just hammers home how quickly and completely you can lose money in crypto. That $3.5 billion wipeout, it happened in days. That speed and scale should be, well, sobering.
Definitely wake-up call. And third,
due diligence. It's absolutely critical. You can't just read a headline or get swept up in, Twitter hype.
right, need to dig deeper.
You really do. Understand the risks. Look into the team if you can. Question the long-term plan. Is it actually viable? Or is it just smoke and mirrors?
So it really forces a tough question then, doesn't it?
It does.
For everyone listening, thinking about this kind of event, this massive fund announcement followed by silence, billions gone, what safeguards can possibly be put in place?
Yeah, what can individuals do? But also, what can the wider crypto world, the ecosystem, do to maybe prevent these kinds of rug pulls? How do we build more trust, more stability, especially in these DeFi and RWA sectors?
Something to really mull over. A huge promise followed by a brutal exit.
Yeah.
It certainly demands some serious reflection.